OK, let's turn now to the latest business and finance news with Stephen Carroll from our business desk, who joins me here on set. And Stephen, the business world will be watching closely as the British Prime Minister Theresa May heads to Brussels for this Thursday's two-day summit.
They certainly will, especially after that vote in Westminster where British MPs voted against the government and in favour of a measure that gives the Parliament a vote on any final Brexit deal. Of course, leaving the EU is a huge issue for businesses and the UK economy, and our regular markets guest Naeem Aslam is here to talk about that. You're chief market analyst at Think Markets. What's your view on this defeat for Theresa May? Is this going to put a Brexit deal in trouble?
Thanks ever so much for having me. No, certainly not, but this is a very embarrassing thing for Theresa May, because I think one thing which serves as a common denominator between Theresa May and Trump is their own parties. They do not support the agenda that they have. But to answer your question, is it going to derail that Brexit? But certainly no. But it does put enormous amount of affairs in jeopardy. And I think what we will be watching very closely would be next Wednesday's vote, because that Brexit timeline, 2019, I think that would be again voted in the House of Commons and back in the Parliament, whether that time frame would be considered as an appropriate time frame. For this Brexit to happen or not.
Very important for the businesses to watch that as well. Another big subject, of course, the Federal Reserve. It's planning 3 interest rate rises next year as the American economy continues to perform well. As expected, the Fed raised rates on Wednesday by 1/4 of a point. That's the 3rd increase and the last under current chair Janet Yellen, who'll be stepping down early next year. In her final press conference, she highlighted that the US economy is now in better shape than it was when she started in the job.
Fois cette année, il passe de 1,25 à 1,50.
The growth that we're seeing, it's not based on, for example, an unsustainable buildup of debt as we had in the run-up to the financial crisis. So I think the risks are balanced, and there's less to lose sleep about now than has been true for quite some time.
Let's go back to Naeem Aslam on this. Janet Yellen there saying that there's nothing flashing red in terms of financial stability in the US. She seems to have left the house in pretty good shape, leaving that job.
Certainly, I think she has done a tremendous job in bringing the economy back to where it needs to be. But the question is that the market was expecting perhaps maybe more than 3 interest rate hike for 2018. And it's only because of that we have seen the weakness in the dollar. But for the equity market, this is certainly a great news. But there's also another important element within it. If the Fed is saying that we are only going to increase interest rate 3 times or perhaps 2 times next year, then it clearly sends a message that perhaps the Fed isn't that confident about the economic growth. We may not get that much economic growth at that pace that we had this year. So from business perspective, that is something that you got to be you have to consider that. But I think in terms of a Fed's general stance, the economy is shaping well, and I think 2018 does look brighter. And for that particular reason, we've seen that rally in the equity market on Wall Street yesterday, and we do expect this equity rally to continue, because the general stance is that yes, the Fed is still behind you. There won't be any aggressive interest rate hike going in 2018.
A contrasting position with what's happening in the Eurozone, though. We've the European Central Bank meeting later today. No sign of an interest rate increase there.
You know what, Stephen? I think that meeting is going to end up with a big bang today, because the general consensus in the market is that Mario Draghi is going to come out of the gate and he's going to be very dovish. But as you know, the problem child, and as you know, I used to say all the time that France is a problem child, but it is no longer the problem child. Countries like Greece, we have seen consistent performance of GDP performing much better than the consensus. So what does that tell you? That the Eurozone's economic health has been performing tremendously over this number of years, or over the number of these quarters that we have seen. So there is no reason for Mario Draghi to be extremely dovish. And I think this is what the market isn't really factoring in. So yes, the 2 important things that we're going to get today is your inflation and your growth forecast. And I think on the basis of this one, Mario Draghi could certainly send red flash in the market, and it could rattle the the forex market by saying that, okay, you know what, perhaps in 2018 we may not need to be that dovish. We may have to go slightly beyond what the market is expecting and then start doing that tapering process, perhaps slightly aggressively, and end that up before that timeline kicks in.
Okay, well, another big topic we've been talking about here has been Bitcoin. We, of course, saw the prices rise above $17,000 this week. What's your view on these cryptocurrencies? Is this a bubble that's waiting to burst?
I have written enormous amount of different articles on Forbes talking about whether this is a bubble or whether this isn't a bubble. But let me break it down in a way that, okay, that whether it is a bubble. When the Bitcoin futures were about to start, we said, okay, the target for that between now and when the futures will start would be 14K. But we hit that level well before that the futures started trading. Now we are trading in around 16 to 17,000. The expectations in the market were that, okay, when these big whales, hedge funds, when they will come in the market, they'll be starting big short trades. But that didn't happen. Why didn't it happen? Because the momentum behind Bitcoin is a lot more stronger. Other coins like Ether, they have performed a lot more better. In fact, when we talk about Ether, which is the biggest coin in the ICO market, initial coin offering, there are other major coins like credits. What is the difference between Bitcoin, Ether, or other coins which are coming in the competitive in this particular market is the transaction time. How many transactions can you take in particular second? What is the cost of that? What sort of a smart contracts are you using? And then certainly like ICOs like credit, initial coin offering, where they are doing performing a lot more better. So I think the entire momentum, especially when your mother-in-law starts talking about a Bitcoin, do you have a Bitcoin? I mean, that explains the momentum, how big that momentum is in the community, how strong the demand is.
All right, okay, Naeem Aslam from Think Markets, thank you very much for speaking to us this morning.
Thank you for having me.
Okay, Stephen Carroll with the latest business news. Thank you very much.